Ladies and gentlemen, welcome back to the channel. Wow, today is a big day. You're going to have ARM reporting earnings right at about the time you guys are watching this video. And depending on what happens with ARM, it does have a direct correlation to Nvidia. If ARM goes up following earnings, the stock that is, Nvidia is probably going to go up and stocks are going to have a fantastic tomorrow. If ARM indeed does fall, like you're seeing it's down about 1% in regular trading alongside other semiconductor names like Nvidia that are also in the red today, then tomorrow could turn out to be a not so great day for stock. Only a fool would tell you that Nvidia is not that important to the markets anymore. It is still very important, and ARM probably has the closest sympathy relationship to Nvidia. And besides your other AI stocks that have already reported, ARM is going to be directly related to Nvidia. And that's why today and after hours is so important for broad markets. Now, we have a lot to cover here in this video, but let's start with what Tom Lee's fundstrat just said about earnings season so far. Fundstrat says 87% of the S&P has already reported earnings. Overall, 81% are beating estimates, and those that beat are beating by a median of 8%. And companies that are missing on earnings are only missing on average about 5%. Now, fundstrat says here 5 takeaways from earnings season and why muted reactions to beats is not a late cycle signal as that typically has been in the past. Fundstrat says this week is light on incoming macro, so earnings is likely the primary focus. Overall, it's been a good earnings season, 80% of companies beating, but with a more muted equity reaction. And this is the first time in 3 years that EPS estimates are now trending higher again, which, just to be neutral here, that either sets you up for a bigger disappointment next quarter or valuation support for markets today. But probably a little bit of both coming next quarter. The B of A trading desk today is issuing a theme alert for consumer travel spending that it could be easing. You had Expedia that missed on earnings and the guidance, Trip that missed, CMCSA Parks commentary that was not so great. Disney Parks, you're seeing moderation or normalization. And Uber had a slight bookings miss. Are consumers slowing down on travel? Are you slowing down on travel and leisure and hospitality? Let me know down below in the comment section. You also have credit card debt at a record high and personal savings rate at a record low. Liz Ann Saunders on X points out the Atlanta Fed GDP Now tracker is estimating 4.2% GDP for this current quarter for Q2 2024. She says consumption is still responsible for most of the current estimated boost. Change in private inventories quite substantial for now. And this estimate was down in the low 3s and just here over the last couple of days has shot back above 4%. But what's actually interesting is the blue chip consensus, your analysts on Wall Street, are expecting around 2% GDP for Q2. On the high side, you're at about 2.9%. On the low side, you're at about 1.4%. So there's definitely a disparity going on between what the Atlanta Fed GDP Now tracker is saying and the average blue chip analyst consensus view is. Fundstrat says of the 18% of companies that are missing, those are missing by a median of 5%. Like I said, they also go on to say on the top line, overall results are beating estimates by a median of 19% and missing by a median of 5%, and 60% of those reporting are beating estimates. Now, this is definitely one the bulls are going to love. The last time this happened, the S&P 500 rose 30%. Oil has shown to be an accurate leading indicator for the 10-year Treasury yield, and with oil declining and yields now rolling over, the stage is set for more upside in the market. And here you can see this chart. The blue line is the S&P, and oil is the black and orange line here, if I'm reading this correct. And you can see, I mean, you've definitely started to roll over, and the S&P has started to inverse that as what happened during this boxed in period as well. Fed Collins said today there are risks to cutting rates too soon. Fed Cook said today, in review of financial stability, households remain resilient, but I am watching rising delinquency rates. And Fed Collins said today, one of those little comments the markets do not like. She said, it is too soon to tell just how restrictive policy is. This comment asks, is it too soon to just go back to the gold standard? Here on the day today, the Fear and Greed Index is going up 1 point from yesterday's number of 38. Today it's at 39. As a consequence, mostly to the three Fed speakers that we heard from today, Fed Cook, Fed Collins, and Fed Jefferson, I believe, is the last one. I'll have to double check that. But you do have 10-year Treasury yields up over 3 basis points today, pretty close to 3.5 basis points. 10-year Treasury yields back to 4.49%. And when 10-year Treasury yields rise, that typically is not great for equities, especially your small caps. And that's why the Russell is underperforming your other major indexes like the S&P, the NASDAQ, and the Dow. IWM is down 0.67% at the time of recording this video. The 10 and 2-year yield curve inversions staying pretty much stable in recent weeks. I used to cover this a lot more here on the channel when it was more volatile, but it's really been in the 30s as far as the inversion. Today, you're negative 35 basis points. It's actually when this inversion goes positive that you may be getting close to entering a recession. So according to the yield curve, we're not quite there yet, and this will likely go positive right at about the time that we are starting to get rate cuts from the Fed. The percent of stocks above their 50-day moving average today sits at about 51%. Indeed, this is down 2.25% today, and you do have about 1.2% of stocks, of all stocks, breaking under their 50-day moving average today. You have seen a rise from our lows of about 27% of stocks above their 50-day moving average up to the high at 55%, back down to about 51%. So you're in a lot better shape than you were, let's call it a couple weeks ago, but I think that's all going to be tested today and after hours when ARM reports earnings. And here's really the deal when it comes to ARM. The stock is expensive. It's not as expensive as it once was when it was in the 160s, but it's still over $100. Keep in mind, when ARM IPO'd at about $35, I believe, low 40s. It ran up all the way to let's see, about 70, and then it fell back to $46. $46 is probably an appropriate valuation for ARM. Today it's at 106. So I think the stock could drop quite a bit, especially if there is bad earnings. But if things just come in line with expectations, which probably should be most people's base case scenario, then I'm not expecting much of a reaction with the stock or as a sympathy reaction to Nvidia. But if ARM does come out with bad guidance and or bad numbers, not because of a lack of supply, as long as demand is there, I think the markets will look past a miss for the most part. But if you do get an outright miss or a disappointment on guidance, ARM is going to fall, and it could fall 20+%. And that would obviously have a negative impact to Nvidia. A 20% drop from here would put ARM back to about $85 per share, which doesn't sound too unrealistic. If ARM did fall 20%, I think Nvidia is probably going to do about 50% of what ARM does. So if ARM goes down 5%, Nvidia is probably going to go down 2+%. If ARM goes down 20%, Nvidia could fall 10%. Coming like tomorrow. If ARM goes up 5%, right, Nvidia could go up to 2.5%, 3%. If ARM goes up 20%, then Nvidia probably goes up 10% coming tomorrow. But I don't really think we're going to get much of anything, to be honest. I think the stock has probably moved a lot before earnings. It's probably better priced for bad earnings, but it is possible we could fall back to the low that we were just at back here on April 19th, which was about $85 per share. And this is going to be the biggest thing that drives markets coming tomorrow that will drive Nvidia stock, thus the S&P and the NASDAQ with it. You do have other earnings as well coming out today after the bell. with Robinhood, Airbnb, AMC, The Trade Desk, Beyond Meat, AppLovin, Energy Transfer, Duolingo, and Exact Science. And then tomorrow pre-market, you're going to have Roblox, Warner Bros, Sundial, Plug, Coronos, Canadian Solar, and Cedar Fair. If we do take a quick look at the technicals on the NASDAQ, you're sitting right above your 50-day moving average. If ARM earnings are bad and it also sends NVIDIA lower, you're probably going to fall to that 100-day moving average, which is around 427 on the NASDAQ. That could happen tomorrow. That could happen over the next couple of days, depending on obviously how bad things are. That would obviously impact how much the markets would fall. But if ARM does well and that sends NVIDIA up also, well, you actually look pretty good for an upside rally in our markets as well, which could potentially send you back to new all-time highs around 450, especially if ARM has really good earnings and it shows the AI demand is continuing. Now that could be really good for stocks. And again, I am expecting such a important earnings from ARM because I do think it's kind of up in the air still where AI demand is. If semiconductor demand is slowing down, if inventories are building, if there's going to be an inventory glut, we just don't know. And that's why next quarter guidance will be so important from ARM today. Now, I think the same exact thing is true for the Russell. You're right above your 50-day moving average. If things are bad, you're probably going to fall to that 100-day moving average. Wouldn't surprise me if the Russell overshoots that and falls back closer to about 195. The Russell's currently at about 203.50, and vice versa. If ARM has good earnings and it sends the markets into a rally, well, that could obviously cause a big movement in the small caps to the upside. Tomorrow, you really don't have much for economic data as well. You do have Fed Daily that speaks at 1 p.m., but that's pretty much it. So let me know what you think about this information down below in the comment section. If you made it to the end of this video, hit that like button as well as subscribe to the channel. It's free 99, costs you absolutely nothing at all, and you will stay better informed of what's going on in our markets each and every single day. Thank you for watching. Enjoy the rest of your day, most importantly, and I will see you in the next one.